Hey, it's me, Brad Hammond here, your local Portland area real estate investing loving agent. I've got some tips for you on how to reduce your monthly mortgage payment, even with these high interest rate times. Interest rates are without a doubt the number one lever as to what dictates your monthly payment. And there's other things you can do to kind of help out with that. Number one, you can get a property that's less expensive, right? I mean, that's pretty obvious. Higher the price, the higher the mortgage, monthly payment, yada yada. Number two, you can look into condos and townhomes, but with that, the one caveat is that you have to find a property with low HOAs. That's going to be huge because those have just been killing deals lately, the past couple of years, because they've just been so expensive. HOAs, monthly dues have just really increased since about 2021 or so. What you're going to be looking for is a smaller building, maybe around 10 to, 20 units, a little bit older, maybe built in the 1980s or so, or newer than that. And yeah, you can search for them. I know I can search for them. If you want help with that, I can search for properties with HOAs under a certain amount. I would recommend under $300 or so. And yeah, that should help out a lot as well. Number three, find an area with low taxes. So Portland kind of locked in the taxes back in the 70s, and they increased no more than 3% per year. And of course, there's ballot measures that get voted on and whatnot. But for the most part, whoever had low tax rates back in the 70s still have low tax rates now. So think of properties in like the North Portland, Northeast Portland, but there's little pockets here and there where you can find low property tax rates. I can help you out with that as well, but they could have a swing from $2,000 a year, which might not sound like a great amount, but every little bit definitely adds up. Number three, you can buy down the rate. This is the one I like the most. When you're buying down the rate, you can either do a permanent buy down and spend a few $1,000s to get the rate dropped by quite a bit amount. You would be surprised. Or you can do a 2-1 buy down, which would buy down the rate by 2 percentage points, going from, for example, 6% down to 4% the first year, 6% down to 5% the second year, and then back at the current rate, 6% or whatever it is today, for the remainder of the loan. I like that one quite a bit. It's usually worthwhile to do that, and it only costs a few $1,000s, and you get a really good bang for your buck there. It usually takes about 2 years or so to make that happen. You can do a higher down payment as well. With a higher down payment, you usually get lower interest rates, and then of course less principal to borrow on, therefore having a lower monthly payment. And then I'll give you an extra one. Number 6 is you can actually remove the mortgage insurance, or you could pay that off ahead of time. And with that, basically you have the seller do that for you. You could do it, but that's usually a good way to go to reduce that. That's usually a couple $100s a month as well. So let me know what you think. Do you have any other tips or tricks? I'd love to hear them. All right, talk to you next time.